So this is the monetary policy statement for August 2015. Both the annual headline and core inflation rose to 5.4% in July 2015 from 4.9% in the previous month. The increase in consumer goods prices cut across all subcomponents of the consumer price index basket, except food crop prices, which declined by 3.9% over the preceding month. The momentum of price increases remained high for services and other goods category, reflecting the impact of exchange rate depreciation. The outlook for domestic economic activities has not greatly changed since the last monetary policy meeting several months ago. Indicators of economic activity point to a relatively strong real gross domestic growth, GDP, in 2015, supported by public investments, faster growth in private sector borrowing, and a recovery in the agricultural sector. However, commodity prices have continued to falter, and this continues to be a source of uncertainty on growth of exports. In addition, the risks coming from the global economic situation continue to adversely affect macroeconomic developments in Uganda. There are several risks around the inflation outlook, and these include the future path of the exchange rate, which will in part be influenced by external developments and the speed with which recent appreciation feeds through to higher inflation. The Bank of Uganda's inflation forecasts reflects elevated risks to inflation. In light of the risks to higher inflation referred to above, the Bank of Uganda believes that a tighter monetary policy remains. So monetary policy is warranted to forestall risks of higher inflation, to ensure that annual core inflation remains in single digits and converges towards the Bank of Uganda's policy target of 5% in the medium term. Therefore, the Bank of Uganda will raise the CBR rate by 1.5 percentage points, 16%, and will also increase the band on CBR by 1 percentage point to plus or minus 3 percentage points, and the margin on the rediscount rate at 4 percentage points on the CBR. The rediscount rate and the bank rate will therefore be increased to 20% and 21% respectively. This is the monetary policy paper for August 2015.